There's an update right now on the trade war and China's efforts to shore up its new economy. New reforms taking hold overnight. Eunice Yoon joins us right now from Beijing. Eunice, what can you tell us?
Thanks a lot, Becky. Well, the Chinese central bank tweaked its interest rate policy, and the bank said that it is in part because of the trade tensions with the United States. So today, the People's Bank of China created a new reference rate by which banks would be able to price loans. This is called the new loan prime rate. It was set at 4.25%, and it's lower than the benchmark lending rate, which has been the guide for banks up till now. So the reform makes it cheaper for Chinese companies to be able to borrow, but the fact that it was set lower by 10 basis points has been suggesting to a lot of analysts here that the authorities here are feeling a little bit cautious because it was much more modest than people had expected. The officials today said that the goal would be to prevent a drop in mortgage rates. There's been a lot of concern about a buildup of heat in the property sector. It's also unclear, though, if the companies will, at the end of the day, want to borrow. So the officials here had said that they were going to make even greater efforts to work with other government agencies to try to allow for more funding for these small and private firms. But they also clarified that they did not believe that this latest reform was in any way a replacement of easing monetary policy. And so because of that statement, there were a lot of people here who were feeling that perhaps the government is preparing for a possible benchmark rate cut, like a proper cut, especially if the Federal Reserve decides to cut as well. Guys?
Hey, Eunice, these changes may be a little less significant than the changes that we heard first talked about on Saturday. Those changes really helped markets in Monday trading. Maybe that's why we didn't see as much of a pop coming in the trading today.
Yeah, I think it's because the move was much more modest. So people were thinking that we could see as much of a 45 basis point move, so that the lending would be a lot more, just that liquidity would be much more available to companies. But there still is this question just because interest rates are still not market driven. And when companies here make decisions about borrowing, they're not really always looking at what's happening with interest rates as they do in the United States. Instead, they're looking at what the policy is, or they're a favored state-owned company in a favored industry. So the decisions here are really different. And so people still aren't clear as to whether or not, at the end of the day, these companies are going to borrow.